What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is September 11th of 2023. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, we've got to spend some time to talk about a coming collapse here for Bitcoin, altcoins, and the broader asset markets as a whole. Price action has continued for the past month to be incredibly weak, and is starting to signal signs that there's no longer buyers in the market at this price range, and that we need to catch a bid at a lower range. We believe that this is going to set us up for potentially even new lows in this bear market. We've got a lot to uncover here. We're going to be diving into crypto and the macro, as well as doing a sponsored review of Kraken Pro, one of the leading exchange offerings on the market, guys. So stay tuned for that. You guys won't want to miss it. If you happen to enjoy the rambling, consider dropping a like. It's one of the greatest ways you can support the channel. And let's go ahead and kick off the rambling. All right. I want to go ahead and start here by talking about Bitcoin. I want to first focus in on the price perspective, and then I want to talk about the indicators we use, and then also talk about the lines of support and resistance. First off, just observe price action here, guys. I'm going to go ahead, hide all here for a moment. Just look at price for a moment. And I want you to tell me whether or not you're feeling juiced up right now about a new bull market. We've been sitting here for nearly a month at this price range going sideways, exclusive of the, kind of grayscale news that pumped and dumped essentially back to where it was before. It was a nothing burger, as we talked about here on this channel. It does not mean the ETF is going to be making any progress here in the near term, right? When essentially we need that narrative to come out, because that's the only thing that's driving up markets here. The BRICS narrative failed, the Bitcoin bank run narrative, all of those were lies, right? They did not play out. We were one of the only channels here talking about that. And again, at the end of the day, right, no matter what camp you sit on here, let's analyze price here and just think about it, right? Back in June, we had a huge wave of buyers coming in. At the same price range here back in March, we not only had a significant move here off of the lows at around 20,000, but we had continuation here for the next month, coming up here towards mid-April, up towards $30,000. So buyers used to come in at this range at 25K. This used to be a discount range where people on the market order flow side were buying extensively. Sellers had been kind of exhausted after the FTX collapse. We'd had those liquidations, and now it was time to start taking risk again in many people's minds. Well, take a look at how it's playing out now. When we come down to the same price range, we are chopping sideways with minimal to no volume. This is not a good look here. Some of the weakest levels of volume we've seen in crypto markets in history and years during these periods of time. If this is a bull market, it is one of the weakest we have ever seen. And there's not the follow through that we need in order to really confirm a significant uptrend. I want to first go ahead here, focus on the moving averages here. Now, you might remember back over the past couple months, a lot of people bashing us and said, Nick, oh, come on, this is a new bull market, got to get on board. But I always said, let's wait and see how we react with the 200 week. And just because we cross the 200 week does not confirm we're in a new bull market. In the same way here, right, that Bitcoin, for the first time in its history, spent nearly 9 months here below the 200 week moving average for the first time. That alone gives you a sign that the good times that Bitcoin had rode in for the last decade is likely coming to an end, and the environment is changing. Many people ignored that, though. They saw that as a reason to buy. Well, as we came up above the 200 week, it did continue to rally here for about $4,000 of price premium from that range. And what's happened here? Well, we've continued to face resistance at the 31, 32K range, right? The critical range of previous support in the last bull market that is now acting as just abundantly clear resistance. Like, it's not me being negative, it's just price action, guys. I'm always going to be honest with you here. There's a ton of people out there who will sell you on what you want to hear. I'm here to tell you guys, what is price telling us? Price is telling us here that it cannot clear through here. So now that we are down below here at the 200 week, just barely holding buy thread here, and now facing a resistance at the 200 day, at least from what we saw back in late August after the grayscale victory that many people were claiming was of a guarantee of an ETF. Well, we've got to do one of two things. Either we got to catch a bid here real soon and start pumping through the 200 day and coming up here and clearing through this range of resistance, or we're coming back down either here into the red channel towards 20K, or even worse, I think the more likely scenario here, if I'm just being honest with you guys, is coming back down into the long-term descending accumulation channel to find support, hopefully at some ranges here that we've seen in the past, maybe for a level like 12,000, which was prior resistance many times in the 2018 bear market. We saw here in February 2018 at this range here, there was two times here where we faced resistance. We had it here in 2019. And along with that as well here in August of 2020, right before we had the next bull market, or really the next major upswing. That could potentially be the range we go to. And if you aren't ready to stomach that, if you don't have the kind of flow of capital where you can really DCA and average in your entry, and not to mention, not even all that, if you can't stomach the idea that Bitcoin can go down not only an X percentage amount of points, it could be 30, 40, 50% from here on out, even worse, but along with that as well, that Bitcoin may not continue to make the same kind of multiples, and it may not be the leading asset to be in for the next decade. You got to be prepared for that, guys. I am not just trying to be negative here or bash on crypto. I love crypto as a market, guys. We've covered crypto here for the last more than 6 years. It's crazy to think about that. We've been around since 2017, but at the same time, I'm going to be honest with you guys here. This looks like it's ready to move lower. And the other thing I want to showcase is our momentum indicator. Take a look at the weekly time frame on our momentum indicator. A huge red flip, the first time we have seen this since we flipped blue back in January. Now, I want to emphasize here as we go here towards the 2-week time frame, even more significant here, you will see that very rarely, right, when we get these flips, we very rarely get these flips. It's multi-month periods, right? And sometimes we get anomalies, right? We get a couple of these here and there, right? Switch back maybe to the monthly here, right? We had a 2-month anomaly here in the blue flip. But generally speaking, now we're red again, right? We had a red confirmation last month. We're continuing that red confirmation. The longer this lasts here, the more likely we are in a longer period of downward price pressure, and a further confirmation that this was nothing more than a relief rally, as we've been shouting about here in this channel so many times, that we don't have the steam to really carry forward a bull market. And I only ask those of you out there, I know many of you out there have been around with the channel since 2017. The people I'm talking to, the veterans who have been around since 2017, went through the 2018 bear market, and those who have gone through this one, they're noticing that there's something different this time. We do not have the steam to really kick off a new bull market. The price action's saying it, our indicators are saying it, the moving averages are saying it, and at the end of the day, the fundamentals are screaming it. We need not look further than some of the largest altcoins to see that case. Ethereum has the best technical setup for a breakout here. I'm not gonna lie to you guys, the setup was looking bullish. We've been generally kind of negative on and kind of bearish here on Ethereum, calling for much lower levels, but it had a year-long pattern here, more than a year-long pattern to eventually break out. It's an ascending triangle. It's a bullish pattern. However, even with all of that, Ethereum cannot show up to the plate. It keeps getting shot down at 2,000. And that's okay for a while, but eventually you've got to be able to either break out to the upside, or if you break through the ascending line of support to the downside, that spells bad news. That is a failed technical pattern. And if Ethereum can't catch a bid here and confirm, if it can't just get above 2,000, right? How is it going to get to 3,000 or 4,000? That's the logic here about resistance and why we've been continuously pointing this out, that we do not have the steam. So if we aren't going to catch a bid here, then that means we've probably got to revisit $1,100, the previous support range here, or come down to $890 like we were back here in June, or maybe even worse. Perhaps our scenario of anywhere from $300 to $500 Ethereum is not too bearish at all. Perhaps it's not too far off because, well, the macro environment. Let's take a look here again at some other plays here. BNB snapping a 5-year-long trend line. This is, again, I think one of the most telling stories here is BNB is kind of the way you bet on Binance as an exchange and the Binance ecosystem and the kind of growth and risk taking on the exchange and volume. We've been against the Binance fight here. I'm not here to say that Binance, is under collateralized or anything like that, right? We've used Binance in the past as well. Generally speaking, though, this is not looking good, though. This is a sentiment measure for the crypto space. And if you just take a look at total 2, again, think back here to the summer, guys, where so many people were selling you on the XRP news being a make or break, this kind of new earth-shattering moment for the altcoin space and for a new bull market. Just take a look at price action, guys. It's going exactly where we've talked about. Lower highs, lower lows. We're at a minimum coming down here towards this range, around 150 billion in my opinion. I'm not saying it's an absolute guarantee, guys. 90-95% probability though. Right? Really, there's a pretty solid degree of confidence here because there's just nothing exciting in this space. It's repeating exactly what it's done here multiple times here since back in May of 2022. We are not catching any serious bids. And I would not be surprised if it's worse than that. Worse than an 85% correction. Altcoins have done worse in the past, and the environment right now does not provide the liquidity or the risk taking for us to accelerate. I want to talk about the Apple news we discussed the other day. I know that video didn't get as much views as our normal ones, so I don't want to spend too much time here. If I'm not here to talk so much about Apple stock and whether or not you should buy it or not. But we talked about how Apple essentially will have a huge ramification on crypto because essentially Apple being the largest asset, depending on where it goes, right, the largest equity in the world, largest stock. If Apple does not pick up a bid here and start to retrace or basically regain against these losses it had off of the news in China. If you guys didn't see that video, I recommend you go and watch it after this one. But if it doesn't start to catch a bid here, this $3 trillion company is going to start to weigh down all equities, and that is going to weigh down crypto. Someone pointed it out here. I didn't really kind of put it in good words in the last video, but it's definitely the point I'm trying to make, which is that if technology stocks do not hold up, I can almost guarantee you guys, crypto is not going to do well. Like, you look at the correlation here in the near term as Bitcoin has become a larger asset between equities and crypto. There's a strong correlation between them. And with crypto being a more risk-on asset, it's going to do better on upswings, just like how equities went up, say, 30-40% across the board over the past couple of months throughout 2023. And crypto or Bitcoin went up 100%. Some altcoins went up 150-200%. And vice versa, when things start to correct, it's going to be even harsher for crypto. That's just the reality of it. And as we've got the yield, the yields on Treasury still holding up here, the US 20-year yield is at 4.5%. We can take a look at the US 2-year yield as well, right? Still holding up there at the relative highs. I would not rule out the idea that we're going to see continued interest rate hikes, right? We've got the CPI report coming relatively soon here, and that could be really a catalyst here. It's going to be on the 13th where we're going to get that report. And whether or not we actually are starting to see declining inflation or not, I think is going to come back into question. I know it seems like a boring topic, but this is really what's going to matter at the end of the day, guys. Take a look at crude oil. The highest price range we've seen since November of 2022, nearly a year of what looked like progress here, what looked like it was going to be an easy snap below the 200 week in so many people's minds. As we talked about here on this channel, it is not over and done until we break that 200 week. And look what happened. Instead, we got exactly what we were worried about here, a clear through the 200 day. And not just a clear through the 200 day, we came down, made it support, and we climbed to $87 a barrel from the relative lows at $67. That is a 30% increase in crude oil prices. This is inflationary. It is going to increase not only the cost of gasoline and probably the cost of your utilities when it comes to natural gas, but on top of that as well, we can see that at the end of the day, this is going to have ramifications across the board, and we haven't even seen them fully materialize in prices yet. Since back in December 2022, gasoline prices bottomed at $3.20, right? Now we are starting to have a year-long period here where now fuel is going to start contributing back to inflation. The base effects, the benefits of that contraction prior in energy prices is no longer going to help the CPI. And we can see here that it's starting to affect other things like fuel prices for airlines. Take a look here at American Airlines, right? Deviated above the line of resistance. A lot of people thought, well, catalyst to go bullish on the airlines, inflation's done with. These companies are just going to reap back those prior losses into new gains. And what do you know? 2 consecutive months where we deviated back down below here. And you guys know the rule. If you've watched this channel long enough, when you deviate back below those lines, it's right back to square one. Coming back here down towards the relative lows at a minimum, coming down here towards $11, $12, coming back here towards where we were in May of 2022, or maybe even worse. A lot of these airlines, guys, we've talked about this actually more than a year ago in the Dash report. There's going to be a huge restructuring in many of these companies. They already massively diluted their shares, and they're still in a position, unfortunately, where they're either losing money or seeing much lower growth expectations over the next couple of months and years than prior. Take a look at Southwest Airlines. right back where it was in October 2014, and still looking like it needs to move lower here. These airlines are getting crushed. There's also the Carnival Corporation here. You can basically see here all the cruise line companies starting to look like they're ready for the next downturn, that they can't cash a serious bid. They have speculators coming in at lower prices, then basically people taking advantage at lower prices. We didn't even make it up to where we were in June of 2021. And Royal Caribbean as well, right? Had a huge breakout higher here, huge deviation. If this starts to fall over and it can't catch a bid here at 65, which would already be a pretty brutal correction for these companies and their valuations, then this is no longer support. And we're coming back down into no man's land. These are multi-billion-dollar companies, but it's not so much the valuation contraction of these companies that matters, right? These companies, go bankrupt, right, and go through restructuring. They'll eventually come back. The cruise liners are not going to go away entirely. My point here is that it's a sign of consumer sentiment. We have dried up the available excess savings from the pandemic. People are taking on credit card debt at much higher interest rates, at much higher rates than they used to, and it's eventually going to hit a breaking point, and that is going to have an effect on earnings. And especially if we take a look here at the regional banks here, and how essentially the regional banks have continued to not catch a bid here. They're not able to get above, kind of after this significant decline. The majority of the losses are still here for regional banks, and we saw this deviation here back around 38, 39 bucks here. As we continue to pull down here, this is really not a good look here. This basically means that many people who are investing in equities are starting to price here that the Fed is likely going to not only keep rates higher for longer, but may even start to raise them higher, because the higher those rates go, the more the regional banks get crushed. Now here's the thing, right? Some people would say, well, Nick, one of the indicators you talk a lot about, the yield curve, has started to uninvert here, which means that maybe the recession is coming. Maybe we are going to start to see some recessionary signs. And I got to tell you guys, this is the catch-22 we are in. There's really no, in the near term, there's no good outcome here that I can think of. And trust me, I'm always approaching it. I always try to think about, the number goes up and to the right. And generally speaking, there are ways to make money. There's going to be some optimistic narrative. I don't think the world is all absolute doom and gloom. We live in wonderful times, guys. I get that. But when it comes to valuations in the market and the momentum and liquidity and the things that matter to actually shape bull markets, we are not in that situation. We are in a clear catch-22 because either the Federal Reserve has done its job raising interest rates, and along with that, inflation is going to crater, and therefore consumer demand, we are going to go through a proper near-term recession. That would be the healthy thing if the Fed would be a bit more aggressive on rate hikes, right? However, I think the Fed has not done enough. It had a pause back in June. It waited. It tried to feel out the economic data. And unfortunately, it's now got to play catch up, as Jerome Powell said here, that there's still on the table the option to continue raising interest rates, continue contracting the balance sheet. And this is just going to continue to have weight here across the world. You have in Forex markets, the dollar at its strongest level against the Chinese yuan since January 2008. Absolute massive acceleration and contraction of available dollars in the system. And the only thing here that markets are looking towards here is Nvidia and AI. That's the only thread that people are holding on to. And at the end of the day, I got to tell you guys, there has been a lot of questions around Nvidia and its supposed break record earnings that it had, about who's really buying those chips and whether or not those kind of quarterly earnings, even if they are real and there's no scuffing of the books, which, mind you, Nvidia has gotten in trouble with before. If we put that aside here, I want you to take a look here at Nvidia against the broader semiconductor sector. Nvidia, since back in 2017, has had these monstrous rallies, as it has been a market leader against the semiconductors. Generally speaking, these 100, 150% moves, this is the biggest one we've seen so far. They usually last a couple dozens of weeks here, sometimes as short as 35 weeks, sometimes 70 weeks, but generally the over 100% moves. We are getting towards the end of this narrative, I think, guys. And I think it's time to start preparing to batten down the hatch and essentially get ready for further downside in the near term, especially if global liquidity does not catch a bid here. If central banks continue to tighten and we continue to contract this excess liquidity, we're in for some serious pain. And don't think for a moment, don't think, guys. I only speak in this kind of like confident tone because there are so many people telling you that this is the greatest time to go long, greatest time to go out, in the market. We were long over the past decade. I've invested for 12 years. I traded in traditional markets, and I got to tell you guys, this is not the time. If you want my honest opinion here, I'm going to put my words out there and be genuine with you guys. I'm not here to show you my referral links so you go excessively trade in the market and get liquidated, and I get a big liquidation fee like so many YouTubers who are promoting Bybit, who are promoting Femex, who are promoting all these really dumb leverage trading platforms that are casinos. I'm not here to just push sponsors on you guys, right? We have our sponsors here in this channel, but at the end of the day, I'm going to try to bring you the genuine platforms here. I'm going to do things in an ethical way. I'm going to be honest with you guys that the market is just not ready yet. It's about getting prepared here. It's about making sure you've got your liquidity ready, getting ready to essentially make those big swing trades. We're getting ready to make a short here in the near term, and it's important to make sure you got the right platform to do that. So I want to ask you guys, if you enjoyed this video, consider dropping a like, but I want to go ahead and spend some time here to talk about one of the few exchanges that actually gets security right and has the features and functionality that you actually need to stay on top of the market. So let's go ahead and dive into our review of Kraken Pro. Alrighty everyone, so in today's sponsored review, I want to spend some time to do a follow-up review on a crypto trading platform we previously covered here on the DataDash channel that I believe has the best offering when it comes to security, features, and functionality that we expect from a cryptocurrency exchange. Today, we're talking about none other than Kraken Pro. Now, for those of you who haven't heard about Kraken Pro is an additional professional platform built for seasoned veterans and traders in the crypto industry, and it essentially builds on top of the already existing foundation that Kraken has offered for over a decade in the crypto space since its inception in 2011. Not only is it one of the best when it comes to security, as it's never had a platform-wide hack or breach since its inception in 2011, but on top of that as well, Kraken Pro gives you one of the best offerings in the crypto space when it comes to analytics, when it comes to liquidity, trading pairs, order types, and all that you need in order to become a professional trader in the crypto space. So I want to spend some time here today to dive into the platform, showcase some of the new features and functionality, and showcase how Kraken Pro is continuing to add new abilities that make it the best offering when it comes to trading. Now, before we dive into all of it, if you guys missed our previous review, I definitely recommend you guys go ahead and check that out. I'll leave it linked down below in the description. But let's go ahead and spend some time here to talk about some of the new features that the platform has to offer. Now, the first feature I want to spend some time to talk about is the increased variety in order types. Now, many of you who are professional traders are probably familiar with the standard order types that are available on all exchanges. Order types, for example, like limit orders, where you're setting a specific bid or ask on the order book, depending if you're buying or selling, i.e. you're essentially having a lower price, you're looking to buy Bitcoin from the current market rate, setting in a limit order bid, or if you're looking to sell Bitcoin at a higher price from the current market rate, then you'd set a limit order ask on the order book, right? Limit orders are pretty standard. And you also have market orders, where essentially you're looking to buy at the best available price. However, essentially speaking, there are other different types of order types that can help you to get ahead of the competition and help you in certain scenarios where market or limit orders may fall short. One of those big ones we're going to be talking about today is an iceberg order. Now, I want to spend some time here to talk about how iceberg orders can be incredibly valuable for those of you who are trading sizable positions in the market, whether you're a whale who's trading with hundreds of thousands of dollars, if not $1 million upwards on some of the big pairs like Bitcoin and Ethereum. But outside of that as well, for those of you who may even just be trading a couple $1,000s on some key altcoin pairs. Now, limit orders usually seem like the type of order type you'd want to set if you're waiting for capitulation. We've talked a lot here, as we believe we're currently in a bear market in crypto, that we believe there's further capitulation, and when that market sell side pressure comes in, we want to make sure our limit orders get filled. The unfortunate reality though is when we start to have those huge limit orders placed on the order book, they are completely visible, and they showcase that someone is looking to buy a very large amount at that specific rate. This can lead towards people FOMOing in and driving the price higher, leaving you not able to get your bid order filled or your limit order filled when it comes to that crypto. Well, with iceberg orders, we can essentially change the game here by masking that position size and allow you to essentially get those orders filled at around the same price you've been looking to get, and also at the same time not revealing your position size. I think this is most valuable here on the range of altcoin pairs that Kraken Pro offers here. It not only can be valuable in spot and margin markets here when you're trading Bitcoin and Ethereum, but I think it's going to be incredibly valuable if you're looking to acquire a whole range of different DeFi tokens, Web3 tokens, as well as various different GameFi and privacy coins within the crypto space. It's definitely something to consider here when you're trading in these markets that are much less liquid than they used to be over the past couple of years. But with Kraken Pro offering deep liquidity and iceberg orders, they work hand in hand to not only give you the best trading experience to make sure you get those orders filled, but additional privacy here when you're placing those order positions. Now, I want to go ahead and spend some time to talk about the second feature here, which is price alerts. Now, it's one thing to have the right altcoins in your sights when you're looking to trade market opportunities or build a shorter long-term portfolio, but it's another to make sure that you get in at the right point and have sights on the market when moves are being made. That's why price alerts are so incredibly valuable. By simply coming to the add a widget button here, we can go ahead and add alerts here within our Kraken Pro interface. Now, the reason that creating alerts can be incredibly valuable is threefold. Not only does it allow us to take time away from watching the charts 24/7, which no professional traders are doing. You've got to spend some time away from it. You have your entries set, or at least your ranges of interest set in mind before you even set up trades. But outside of that as well, this can allow us to actually mitigate our risk here when it comes to trading. Because it may be that there's a price range that we want to set a limit order or potentially market buy, or even set an iceberg order to fill position sizes. But it may be that we don't want to have those orders filled because we're worried about some potential risk. It may be that there was some event that knocked the crypto down 10%, but it's so big that it could continue 20 or 30% and may not be a crypto position that you still want to build. If you set in a limit order and just simply wait for it to get filled, you may be buying into a position that's set to go even lower, especially if there's another market sell side pressure to get down to those lower price levels. That's why when creating a price alert here, we can do some really cool things. So for example, let's say that I was thinking about placing a trade on Dogecoin when we start to see initial signs of momentum. For me, I'm not looking so much to buy the dip on Dogecoin, but rather wait for an initial 5 to 10% move, because historically speaking, when I see those moves in Dogecoin, there's usually a good chance that it's got further upside to go afterwards. So what I'm looking for here is to set an alert on Dogecoin. I just simply click on the market pairing. And then along with that, I have to specify how I want the alert to be triggered. In this case, I want the trigger to go off when the last price is at or above a certain price range. Essentially, I'm looking for a 10% premium. And what's really cool here is within the Kraken Pro interface, when setting alerts, it's very simple. This is the current market price here at around 6.3 cents. And I want to go ahead and rise that up towards around 0.06946. When that gets hit, it's going to create an alert and essentially notify me when that price level has been reached. And from there, I can determine whether or not the news or the market excitement or the liquidity and trading volume and the acceleration is enough for me to really go out and place a trade from current prices. So this is where alerts can be very powerful, and there's a whole range of different types of alerts we can create here in order to stay on top of the market. We can set it when it's above a certain price range. We can set at or below here. Generally speaking, though, at the beginning here, Kraken Pro is focused on the biggest thing, which is getting above certain levels in order to let us know that, hey, market price is entering a certain range of interest. Perhaps from this point on, we might want to set market orders or limit orders and potentially start getting our positions filled. And we don't have to watch the charts 24/7. But most importantly, it allows for additional risk management. We don't have to just set it and forget it when it comes to limit orders in the market, whether that's buying or selling, and potentially miss out on a lot of the volatility that might have been picked up from our trading activities. Now, for me personally, I love the alert system as well as the various order types that Kraken Pro offers. But for me, the biggest selling point still is the range of analytics you can get on various market pairs. such as measuring things like rolling volatility, the aggressor differential, which is essentially measuring the market order buy side or sell side pressure. As you all know here on the channel, that's a very important thing for me. And also tracking the general trade count to see whether or not there's a lot of FOMO on the market or if markets are slowing down. But what better way to stay on top of this, not only from my desktop computer and my web browser, which I'm definitely more familiar with, but also from my mobile phone as well, wherever I go, so I can stay on top of the market. Well, this is probably the biggest feature release that Kraken Pro has done yet, and that's the launch of their mobile application. And they did a phenomenal job on the mobile app. Essentially speaking, with the Kraken Pro price alerts that have been offered recently, this makes the mobile app even more powerful here. From here, you're able to access all of the core features from Kraken Pro as an exchange, both on iOS and Android. It allows you to place order types, to cancel orders, and along with that as well, browse various different types of cryptocurrencies and potential trading pairs, and be able to access the deep analytics that are offered from the platform. I think this is a huge leap forward for Kraken as an exchange to not only have the core Kraken app if you're looking for more of a simple experience, but also your Kraken Pro activities from anywhere in the world that you may be wanting to trade. I think this is a really great offering here, and for those of you who care deeply about both security, but also not compromising the features and functionality that make crypto exchanges incredibly powerful when it comes to traders, then I definitely recommend you guys check out Kraken Pro at the link down below in the description. We're going to continue to keep on top of the project here and continue to cover it here on the channel as we go throughout the future. But I just want to say here that, again, if you really are looking for that starter exchange, while there are a lot out there, I personally think Kraken Pro has the best offering. Hands down, I'll stand by it, and I continue to believe that Kraken is one of the best in prioritizing that element of security, which is so vital here in this industry, with continued hacks and continued exploits in the crypto space. That being said, everyone, thank you all so much for watching this video. If you guys happen to enjoy it, consider dropping a like, and I'll see you guys in the next video. Take care, everyone.